You really need to talk to the folks here at Next Level. I've got to tell you, just speaking to the people here, they are fired up, they get it, they've got the right balance, and they're all increasing their income, they're increasing their production.
But you're dealing with people that are in the trenches dealing with this, are practitioners, had failures, had successes, learned from it, and it's about helping you not just like get through the next month, but it's about creating legacy business for yourself.
But I can tell you that you are mission focused. I know you're purpose focused, and I can tell you that every loan officer that I've communicated with that's been part of your platform has been a raving fan.
This is the Next Level Loan Officers Podcast, a proud founding member of the Real Disrupt Podcast Collaborative. You can check out more awesome podcasts at realdisrupt.com. And now, Kenneth Travis and Sean Zalmanoff.
All right, welcome to the Next Level Loan Officers Podcast. My name is Kellen Vaughn. I am your host for this episode. I want to welcome all loan officers who are tuning in or downloading to the #1 loan officer podcast in the nation. We are honored to have you here with us. And hey, listen, if you're a loan officer and you're not part of our Next Level program, listen, it's super easy to join. It's only $197 a month, and you too can be a part of our amazing community and get to rub shoulders with some awesome loan officers, just like our guest today, Mr. Matt DeLuzio. Welcome to the studio, my friend.
Awesome to be here, Kellen. You know, I'm always a fan and always a listener, so happy to be here with you and providing anything I can to other loan officers out there, you know, dealing in this market.
Well, we appreciate you being here. Matt is an OG when it comes to the Next Level family. He's been with us for a long time, a couple of years now, and a dear friend of mine, hails from Denver, Colorado, and currently a branch manager with Spire Financial there. So, Matt, did I leave anything out? Tell us a little bit more about you. And I know you've been a guest on the podcast before, so welcome back. But if somebody hasn't heard that, give them a little a quick shout out about you and your business.
Yeah, no, absolutely. Thanks, Kellen. And like I said, always appreciate being here. As it relates to us and me and my business, you know, I haven't been a loan officer for a super long time, only about 4 years now full time. I can peg it by the age of my second kid. So that's how I remember so vividly. But, you know, what is happening in the markets, you know, I've grown continually every year, even when others maybe were struggling a bit. You know, a couple years ago when the market and margins compressed, we were still growing. And there's always value. You know, I'm a big student of our craft, and I love listening to what other people are doing, what scripts people are using. And I'm a big sports guy, so I used to work in professional sports, and so I like to always improve and just, you know, kind of evaluate what we're doing, how we're doing it, how are other people doing it, and that's what I love about Next Level. And yeah, I was an original member, you know, right. Way back. So it's been a great group. I absolutely recommend people joining and you know, getting to those live events, you know, are really, really important. I think there's one coming up here soon. And, you know, I think that's, you know, we gotta be a good community and help each other, because, you know, we don't really compete that often against each other. And I enjoy, you know, helping others. So.
Well, that's awesome. And listen, you know, not to go on, but, you know, as an original member, and I know that you've inspired so many loan officers in our group. And I can tell you, I remember the first time you and I did a coaching call, and you were, you know, fairly new to the business. And it's amazing to see how far not only you personally, but your business has come in the last couple of years. It's really been a fun journey to watch. But one of the things I wanted to kind of touch on today, and the topic of our podcast, and you're, as you mentioned, somebody who is kind of always looking at the game plan, right? Looking at the team. How do we adapt? How do we change? You know, how do we attack this week? If there's one constant in the mortgage business, it's that it's ever evolving and change is always happening, right? So the topic that I want to cover today is just threats to the loan officer. You know, you and I were kind of going through a few of these off air before we started, and it really got me thinking, and that this is such an important topic. And really at a time in the market where things are shifting maybe quicker than they ever have. At least I feel that way. I mean, it's like every day we wake up, I'm waiting for that MBS highway text to tell me whether it's going to be a good day or a bad day. I feel like there's a new competitor, a new either wholesaler or retail company going public, which just seems to constantly kind of change the dynamic of the landscape in the mortgage industry. And so I just want to cover, we have a couple of topics here. Do you mind if I just kind of pick your brain on a couple of these that are maybe?
Well, first, no, absolutely. And I'll just say, it's never good to have your mood set in the morning by green or red in the MBS market. So we'll talk a little bit more about that.
Yeah, exactly. Don't live by my words, but it is amazing to me, anytime you see a market that's as volatile as it has been, and I don't even mean just the MBS market, but just the economy as an overall. We've been dealt this COVID blow, which is unpredictable. I don't think people know how to deal with it or what it's going to do, and so they don't really know. But we'll save that. Maybe we'll do a little bonus at the end, and we'll talk about that. But more specifically, I want to talk about a couple of topics. So, and I'm going to jump on this one first and foremost because I know that it's one that every loan officer is feeling the pain right now, and that is with a lack of inventory. We have a lot of our buyers, pre-approved buyers, who are flocking to builders, and they're flocking to builders because there's incentives, there's free money, and there's inventory, and they don't have to fight with 30 other people and bid $100,000 over asking in order to get a deal done. And listen, if you've ever been in that process, it's emotionally draining, and people avoid it at all costs. So, Matt, what are you guys doing, or have you seen anything specific to the builder market that maybe you guys are attacking it in either a different way or have maybe a different approach that might help some of the loan officers that are out there?
Yeah, absolutely. And I like to speak in anecdotal stories, so I'll tell one here in a second with regards to what I did recently for a previous client who did exactly that. They went and bought a new build, and the builder has their own mortgage company. And as we know, it's very difficult at times to compete with those because they're not going to give the incentive if they don't use your mortgage company. And I'll tell actually two anecdotal stories. One other one just came to mind that was interesting as well. But Kellen, you're absolutely right. Right now, threats to the loan officer right now is probably, listen, first off, we've all been really blessed with a great refi market and serving a lot of people in refinances. And that's great. And refinances aren't dead yet, right? And they never really are. There's always a small subset of volume that's going to be refis. But we have to be focused on purchase business. Inventory's low. It's challenging. It's going to be low for a long time. If you follow Barry Habib, which everybody absolutely should at all times, he puts out just the most amazing content and really makes sense of what is happening in the inventory market and how you can explain that to realtors. So you're not on MBS highway, you should be, in my opinion. But on the inventory side, if they're going to a builder, right? And we talked about that of now there's a $4,000 incentive for using the builder's lender. And let's just assume that they are aggressively priced in the market. Their mortgage lender isn't pumping it on the back end. They're aggressively priced in the market. It's a fair deal. How do you beat that? And one of the things I think that we talk about with our group and our loan officers and myself personally is always being an advisor. And how do you do that? How do you become an advisor? You have to have more information. When it comes to builder lenders or fintech or, all of these online lenders that are going to be maybe a little bit better priced, from a competitive standpoint, because they don't really have a loan officer that they're paying, right? That's the truth.
Yep.
Well, if you're being a loan officer and you're getting paid as a loan officer, you got to be an advisor. And how do you do that? You have to have more information. So I'll give you a perfect example. These previous clients that were under contract on a new build, they're closing in a month and a half here. They get the information, and I told them, hey, once you get the information from the builder, send it over to me. Builder sends them a 5-year ARM scenario and a 20% down scenario. And I said, hey, I'm just curious, why did you get the 5-year ARM? They're like, we don't know. We're not interested in that. Okay. And what about 20%? How does that feel? Well, it's actually a little bit of a stretch for us. Okay. What are the goals overall for you in the next, number of years? Well, we're following, some financial advisors' advice, and we're really trying to eliminate and pay down our debt, and we're so close. Okay. Well, how much is that? It's about 20,000. Okay. So, you're purchasing at 530, you're planning to put 20% down, you have $106,000 due at closing. And, that's a stretch, right? Yes. Okay. Have you, have you budgeted for blinds? Have you budgeted for landscaping? All these things that builders, don't do, that they don't really have budgeted for. All of a sudden, then they have to go get more debt, more credit card debt, however they have to finance it. Yeah, we've done that a little bit, but we do need probably some more cash. Okay, did you guys talk about doing less down, 15%? You guys have great credit. Maybe we can just do a bit less down, structure it in a better way long term, and have more cash in your pocket. They're like, we'd definitely be interested in that. So, I'm a big fan of Mortgage Coach as well. I've used Mortgage Coach for a long time. It's a great platform to, show people exactly what you're advising. I compare it directly to the builder side, right? Hey, with their 4,000 incentive, you're going to have to give that up if you go with us. That's just what it is. I can't make them give that to you. But if you give that up, and here's our structure, right? At 15% down, single premium mortgage insurance. If you're in a loan officer and you don't know, you get 25 basis points for going 15% down. You get a little bit better in price, 25 basis points better, and maybe the single premium is 43 basis points to buy it out. Really cheap, guys, right? When you explain this to people and you show them, and then we really compare side by side, and we have some scenarios of, hey, here's the builder side at a 2.875 rate. Well, we're going to use cash more aggressively because also we've had the conversation. You guys aren't planning on moving ever. You're planning on being there at least 10 years, right? Yes. Okay, well, let's look at that. Let's look at the value over a 10-year period. So we're going to go a little deeper in rate. We're going to go with single premium, and you're going to have about 20,000 to pay off the other debts. It's the same thing that you do as a loan officer and advising on cash out scenarios.
Sure.
Right? Those are the types of things that we're doing. And by the way, we win. Now, you don't win every time. The second story, real quickly, I'll tell you. Client comes to me under contract with a big builder. This builder has a lender. They couldn't qualify. So he comes to me. He has VA eligibility. They never asked him. Right?
Oh.
So I was like, hey, you actually have VA eligibility. It allows you to go a little higher in debt to income. You can get the deal done this way. And it ended up that builder stole it back from me. They used my playbook. They stole it back. But you know what? At the end of the day, that agent that referred that person to me, I just put a deal back on their plate.
Yep.
Right? They think about that. They recognize that. That's how we advise all of our clients. And sometimes, guys, I talk about this all the time with our group, and it's a big terminology for me. It's all about the parlay, right? If we're serving people well, we're going to continually get referred. And maybe, we get a deal snaked from us by a builder or something like that, but we've advised the clients really well. Our realtors know that stuff, and we establish that trust to where it really bulletproofs our relationships.
Yeah, that's great. It's you're 100% right in what you said too. And I think a lot of loan officers, they look at these deals and they realize, oh man, I lost one, and they get real hung up on the one, right? Guys, most of us, this is a long game, right? It's a long game. And the hope is, that you're in a position as a loan officer that you can be in this business for a while. So, I love what you said, Matt. You're not going to win them all. And that's 100% true, right? So win the ones that you can, and the ones that you can't, let them go, right? And go find another deal. And to your point, maintain that relationship, stay in front of that referral partner. And we've taken deals, I'll tell you, just, as you were telling those stories, I was thinking back to several examples, but I've had 2 or 3 in the last 12 months that the builder took that came back to us,
Yep.
right? Because the builder lender, shockingly didn't deliver on what they promised, right? And the other thing too, is, if you think about it, to your point about being an advisor, which I think that's amazing, and we talk about CMA here all the time, and that's a big win for a lot of loan officers, is these guys who are making maybe 30 basis points, maybe on a deal, maybe less, they don't have time, right? If I'm a builder lender, I've got deals coming into me all day long. I have no more than 15 minutes to spend on the phone with a client, if that. So I can promise you that they are not digging into anything that could potentially save that client any money, that could put them in a better spot, that could make a loan program that fits them better. They are not concerned with their long-term goals, their current cash position, to your point, what's going to happen after you buy the house. You're going to want to furnish it. You're going to want to do all these other things. They're not asking any of those questions. They don't have time. They can't afford to do it. And you and I wouldn't either if we were making 20 basis points on a deal, right? So I think you have to exploit the weakness. And the weakness is they're going to have loan officers who are less than an advisor. They're probably not trained great, and they don't have the time to spend with the client. So
yeah, it's just a different business model. And not that there's anything wrong with it, but they are order takers, and they're just gonna push out 20% down. They're not gonna advise, they're not gonna do the math. It was very interesting. I had the client come back to me and say, oh, well, this lender had said that 15% down is just smoke and mirrors. And I said, well, I've shown you the math. And so math doesn't lie. The smoke and mirrors really was they're giving you 4,000, but they're charging you points to get you to the rate. Yeah. Right. Yeah. So that's real true smoke and mirrors. Let's really talk about that stuff. Let's advise. And then you build trust, and you listen, I can always sleep at night if I know that I'm advising my clients well. And as competitive people, like if you're a loan officer and you want to be successful, you probably have this just drive to be competitive. Like we just, take losses a lot harder than we celebrate wins. Mm-hmm. I can still think about the ones that upset me that I lost, and that's okay. Yeah. But I know that I advised well, right? Yes. And those are the things that I am a firm believer in. We believe in, and just being that really preferred, trusted lending partner, and that's what will sustain us over time.
I agree with you 100%. So I've got two more topics that I want to jump in real quick, but since we're on the topic of kind of the relationship piece, I think as we're starting to see, and this is early March that you and I are recording this, so just for a time reference, we're starting to see a shift in the interest rate market. You and I were talking about the realtor referral relationships, and just what's happening in that market, and why maybe some loan officers got maybe too heavy into refi. They ignored maybe some of their realtor referral partners. What is your team doing now, or have you been doing to make sure that you're staying in front of those and kind of keeping on those relationships as that threat of maybe other LOs reaching out to your referral partners starts up again?
Yeah, and agents have been ignored for a year or more. I think it goes back to just, again, maintaining and building very, very strong, long-lasting relationships. I have no concerns about other lenders calling on realtors that work with me because I'm confident in our relationship, and we have just such a deep, established trust. There might be some things that they have to go out and do and look at other places, but I am not concerned. I've had agents send me voicemails from other lenders like, "Hey, use Matt DeLuzio, and he's awesome. What's so great about him?" Right? Just different tactics, and it's interesting. But I think that if you continue to focus on your relationships, and really highly advised clients, they're going to have no problem continuing to refer you. And then you perform on the other side, right? You got to be able to perform on the operations side. And that's what a lot of people aren't able to do. So, really critical on all of those fronts to be, just the absolute best that you can. You're not always going to be perfect, right? But if you change, if something messes up, you just got to own it and take it. And we're not always perfect. I mean, the self-employment stuff right now is incredibly challenging with bank statements and all this stuff, right?
Yep.
Guys, there's going to be a lot of drop balls out there, and just be there, be present, and you'll pick up relationships.
So what would be some advice if there's a loan officer that's listening to this right now who maybe they've got a little heavy into the refinances last year, maybe they let a few relationships kind of fall to the wayside. What's been a kind of a go-to strategy for you and your team to pick up some new referral partners?
Well, talk about what's important to them right now, especially in a low inventory environment. They're having to deal with a lot of competition. How are you going to make their offer stand out? How are you going to make their offer more competitive? For us, we're really guaranteeing clients earnest money. We're waiving loan terminations, right? Because we've done full approvals. We have a specific branded internal program where we can do that. And I know that a lot of other lenders, especially in Next Level, are doing that as well. Again, putting our money where our mouth is. But not only that, as it relates to the competition in the market, understand or teach people how about appraisal gaps. What does an appraisal gap really mean? And how to educate and communicate to their clients on appraisal gap, because a lot of people are going over asking, and they may not think they have money for appraisal gap when in reality they're putting 15% down or 10% down, and all of a sudden instead of 10%, an appraisal comes in short, it's just a 5% down program instead.
Right.
And they're just guaranteeing some cash on the other end of it. Understand those things. If you don't understand those things, get with somebody that does, and get into coaching, get into, find a mentor that can help you with some of those things as it relates to structuring. And you will win relationships by doing that and being present.
I love that. Okay, so you were going to harp on the candles, the green and the red. I wish there was a blue one every once in a while. So give us your quick take on rates, watching markets, candles, and all that.
I mean, I'm a CMA grad. I love the certified mortgage advisor, that you guys and Barry put together. Really incredible stuff and very, very valuable. I think it's just understanding, that we're not always going to know exactly where the market's going. We don't know what's going to change the market. And, there's economic news that comes out, or there's a new vaccine that comes out, or, a variety of things can move the market. Again, if we're advising clients well, we're really not, so set on, I have to hit this price, right? Maybe for some clients on a refi, it makes sense. They have to hit a certain price, and that's what you've discussed with them. But I mean, to really on the mortgage side or the purchase side, there's always going to be purchase business. People are buying and selling and moving. And again, trying to advise well, just keep talking to them. Keep talking to them if rates rise, right? Hey, here's how we achieve a similar structure. Again, hey, new builds, long build times, right? Got to keep in touch, got to stay in touch with them. Understand, hey, worst case, if market does move, this is how we can keep things in the same place where they are, right? Maybe it's you got to pay a point and buy a rate down, or pay a point and a half. Again, it's very market specific. It's very individual to each client on buy downs and those types of things.
I always think it's funny. I'm in a lot of loan officer, Facebook groups and things like that. And just the amount of sheer panic and that happens when, the market makes major news is always funny to me, because I don't understand why so many loan officers either have so much of their pipeline unprotected, or they're just not having those conversations. To me, it's as an advisor, one of the first things I'm doing when a contract, at least on a purchase, when a contract comes in, is having that discussion about where rates are today and what they can expect. And if it's a rate that the borrower likes, then we're locking that in and moving on. That's always been a philosophy of mine, is listen, if it's a rate that makes sense, and I'm again, as an advisor, we're talking about, here's economic news that's coming out, here's what the potential charts are showing us, here's what we think is going to happen to the rate. But at the end of the day, Mr. or Mrs. Borrower, this is ultimately your decision. And if I had a crystal ball to tell you what it was going to do, I wouldn't be in the mortgage business right now. So, I think to your point, it's in the constant theme throughout here is just, be an advisor, educate your clients, let them know, what's going on, what's happening in the market, and, just let them know that it's okay. And things are going to continue to kind of move along, and we're going to be an advisor. We're going to be with you every step of the way. So Matt, thank you.
I think one other thing real quick on that, Kellen, it's so psychological too, right? Mm-hmm. You talk to clients about it. You're like, hey, we could float in the market and maybe we gain an 1/8 or 1/4%. And this would mean, hey, you have a $50 a month better payment. But what if the market turns and goes the other way, right? Most people, the same way we celebrate, we take losses harder than we celebrate wins. Most people are like that. They don't want to lose. Yep. So, that's where you have to put that in their court and explain it to them. And when they think about, the potential downside risk or loss is much greater generally for most people than maybe gaining a little bit.
Well, you're 100% right. The reaction that client's going to have to you of you saving them an 1/8 versus charging them an 1/8 more is going to be dramatically different. And 99% of most borrowers, what they want is predictability. They want to know, okay, this is my monthly. You're telling me this is my monthly payment? Yes. Okay. They want to know that, and they want to hang on to that, and they don't want that to change. So I think you're 100% right. Matt, dude, as always, you bring such an awesome presence, not only to the Next Level group, but there's so many loan officers that look up to you. You've just done amazing things in the last couple of years, and really taken your business to a whole new level. That is just awesome. So, man, kudos to you. It's awesome to watch you and amazing to see what you've done. And dude, I love the thing about the guaranteed earnest money. Like, what a differentiator in your market that really not only helps your buyers, but separates that offer from all the other offers that are in the stack when an agent's looking at that. So I think that's awesome. Listen, if there's a loan officer out there that's listening to this and has maybe some questions about your operation or your program, is it cool if they reach out to you?
Yeah, absolutely. Like I say, we all share, we're a culture of collaboration at Spire Financial. That's how I can tell you, we get fulfillment out of teaching others and really being a resource to other people. So again, I'm not threatened by competition. We rarely compete against each other in the market for the most part. So, I'm always happy to share. And because I've also gotten so much from people, specifically in Next Level, or, I'm just been aligned with the right mentors where I'm at. So, I'm always happy to be a resource.
Cool. Throw out your email address if anybody wants to shoot you a message.
Yeah. So Matt DeLuzio, it's just first initial M, last name DELUZIO at Spire, SPIRE financial.com.
Awesome. Thank you, my man. Listen, if you're a loan officer and you're listening to this and maybe you're in the Denver area, I can't endorse Matt enough. Not only is just a stand-up guy, but an amazing loan officer as well. So thank you for being with us today, Matt. I really appreciate it. And listen, as I mentioned before, if you're listening to this and you're not a part of Next Level Loan Officers and you want to get to know Matt and maybe others like him, man, join us. It's $197 a month. We do a couple of masterminds a year where we all get together and we share ideas just like we did on this podcast. You can learn more at becomenllo.com. Again, becomenllo.com. Check us out. Or you can always email us at support@nextlevello.com. Matt, thank you again, my friend. We'll talk to you soon.
Pleasure, man.